Hey guys, thanks for joining us here today. I am very, very excited to be here on a roundtable with myself, Scott Royal Smith, Esquire. I'm an asset protection attorney for real estate investors. I'm here with the infamous Dave Foster and Greg DeSalvo. We are very, very excited to be able to jam out to you guys with some very high-level content regarding what you can be doing to really maximize your returns and really better yourself as an investor. I'm going to kick us off today with looking at asset protection, and we're going to be going through 1031 exchanges and a bunch of other great information with that, guys. So just to get us started here, what I want to talk to you guys about is what are the court-tested systems that we can use to eliminate the threats of lawsuits. Lawsuits are one of those things that can really burden us as real estate investors because they come out of nowhere, guys. And they're usually things that insurance only protects us from some of the time. Threats of a lawsuit are things that extend over a 20-year period. And it's over that 20-year period that you have the 95% chance of being involved in a major lawsuit. If you're in a general partnership, you're actually liable for anything that you and the person you own the asset to. So now you have double the likelihood of that lawsuit. The reality is it's not if a lawsuit's ever going to occur, it's actually when is it going to occur and what situation are you going to be in. I've personally seen somebody lose over $3 million from a single lawsuit when they own the property in their own name and they had insurance because they thought their insurance was enough to protect them. So all that time, all that effort in building that portfolio, and just in one situation, one instance of a lawsuit, and poof, it was gone. And their insurance wasn't there to protect them. So, this stuff is really real. It doesn't happen to everybody, right? But what it does do is say that, there's a high likelihood that it will happen eventually, to us if we're in this game long enough. And there's things that we can put in place now to make sure that we're going to be in the best possible position when that actually happens. So today, even as an average investor who has or seeks to has two or more properties, has a way to get this ironclad protection at a reasonable cost. And in fact, I regularly have clients who set up their company structures before they even own any real estate because they understand that there's a plan, there's a process, there's a foundation for this growth that you're looking to experience. And using my system, every real estate investor has this streamlined way to achieve the maximum protection and anonymity of their ownership. And you can do this all within with one company to maintain, one bank account, one set of books, and one tax filing, guys. It's never been easier for you to protect what you're working so hard to build right now, and this is what we specialize in Royal Legal Solutions. So let's take a look at the Royal Protection System. The first step is to create elite asset protection, by making yourself and your business an unattractive target. The goal here is to make it look like you don't own anything, like you don't qualify to even buy a toaster, right? When this is done correctly, it stops lawsuits before they even start, since plaintiffs' attorneys will only go after somebody when they absolutely know they get paid. One way to accomplish this type of anonymity is going to be using a Wyoming LLC. It's a great structure. It's anonymous. It has upfront as well as yearly costs. Another way to create anonymity is just to use a trust. A trust is a private document, so nobody can find out who owns it. And you can start protecting yourself with this trust strategy for as little as $500. That's right, guys. You can have anonymity in place so people can't find out what you own for only $500. And depending on which path you choose ultimately, making yourself anonymous can be enough. It can be just a really good place to start for what you own right now. If you don't own a whole lot and you're saying, hey, this is something, I just don't want people to know what I have that makes me uncomfortable. I think it might be at risk. I would say go ahead and start with just an anonymity in place, because when you have more later on, we can add one of the next building blocks that we're going to talk about here in place. And that's the key point to emphasize to you guys, is that everything that we do, it builds one block of protection on another, so you never have to redo anything ever. The system is the last thing that you'll ever have to do in your life regarding asset protection. The things that we put in place now, you'll never have to change it again. It's going to grow with you as your portfolio grows. And so it's really something you can have as continuity of foundation for how you do your taxes and run your business from now for forever. So that's the first step, guys, is creating the anonymity in place. And just to let you guys know, there's 5 steps altogether. Each one of these is going to be building on the last. So now, and here's a fact that a lot of investors don't know, is that transferring assets into a trust doesn't just create anonymity, it completely bypasses the due on sale clause. For anyone who doesn't know, the due on sale clause is a stipulation of mortgage or deed of trust that requires the borrower to pay the entire loan balance upon the sale of a property for which the mortgage is being secured. So the bank and the mortgage lenders use due on sale clauses to prevent buyers from assuming the current mortgage at the original interest rates. But fortunately, transfers to a trust are exempt from the due on sale clause because banks use these transfers as something done for estate planning purposes. And if it's done correctly, you're able to avoid property valuation reassessments, excise taxes, and transfer taxes, since this style of transfer into a trust qualifies as an exemption for those same estate planning purposes. Now, just for clarification, all we've done at this point is just to create the anonymity and avoid a bunch of fees and taxes. The trust alone doesn't actually provide any protection. To protect your assets, we have to pair the trust with a company structure or an LLC to ward off these types of the pesky lawsuits and litigation. So that's our next step, combining your land trust with an LLC. And if you're wondering why we do it, it's simple. The land trust grants you the anonymity from the public records, and a lawsuit can't get started if the lawyer doesn't know who the property owner is, and the land trust blocks them from linking the property to you. There's nothing there for them to tie it to, so the likelihood is that they'll never really even sue. If the lawyer ever did get it off the ground, which is highly unlikely, you'd still be protected because your LLC would make sure that the lawsuit against you doesn't touch the property LLC. And the lawsuit against the LLC doesn't touch you or any of your other properties. The plaintiff's attorneys hate this structure because they can't find out if you own the asset. And even if they did, it's protected. And if they can't get paid, they don't sue. The only downside is you either have to lump all the assets into one LLC, which creates a big pot of gold for them to attack, or you end up establishing one LLC per property, which can run you about $800 each per year plus. Right, so just an LLC is typically not the best structure. It's the one that everybody's been using, but we actually have something that's even better than that. And that brings us to step 3 in the Royal Protection System, which is using the Series LLC with the Anonymous Land Trust, as well as Anonymous Trust for the ownership of the Series LLC. What that allows us to do is to be able to own the company anonymously, and we get to own all the properties anonymously, and we get to compartmentalize every asset as if it were located in its own LLC. So the Series LLC does this by applying a parent-child structure. There's one company filed with the state using one EIN number. The parent can create an unlimited number of children. Each of these we call a child series. Each child series acts like an individual LLC in every way, and it provides the same asset protection as an individual LLC. The lawsuit against one child series won't affect the other children or the parent. We can make the LLC anonymous by just using a trust, just like the land trust, to own the LLC. So that way, anybody looks at it, they say, well, who owns this LLC? It looks like a trust owns it. Who owns a trust? We don't know. It's a private document. The anonymous land trust and the LLC filing all relate back to Scott Royal Smith, Esquire. That's me. That's where the attorney comes into play here. Any information about the company or the trust is thereby protected by the attorney-client privilege. They can't ask for the information, and we can't provide it. Remember, we're only using trust for the anonymity, that the Series LLC will be what we do for providing the protection. So, by the way, what we learned so far about the Anonymous Trust and the Series LLC, the way they work together is to protect your wealth and protect your legacy. Just knowing this much about what I've covered with you guys so far in the few minutes that we've been working together puts you in the top 1% of elite investors. I've already given you guys the playbook to protect yourself so far, but there are 2 more steps to run through, and I know they're going to blow you away. And the reason I say this is because most people aren't just protecting their wealth for themselves. They want to protect their legacy. That's their children, their families, the community, their charitable causes, the people and things they care about most in the world. So there's another step you must take to ensure the wealth funds your legacy when you die. If you don't do this, the state makes those decisions for you. You need an estate plan if you want to control your wealth when you die. And what I'm going to share with you next is how you can get it done once and for all in under 30 minutes. Guys, you can check this off of your list of something you know that you've been needing to do for a long time, and you can have it done in under 30 minutes. Does that sound good? Excellent. most of you either don't have an estate plan, or you set it up and you haven't been managing it. You haven't been watching, what assets are in it or out of it. You probably didn't deed your properties underneath it. A lot of people make that same mistake. Royal Legal Solutions, we take all of the heavy lifting off of you. We make sure that everything is done correctly for you, so you don't have to worry about that. But even if you have a current estate plan, I can almost guarantee you that it's incomplete, and that's really bad news. But the good news is that whether you like it or not, there's a simple solution to that. Make sure it never goes obsolete, that you'll never have to update or change it. And here's how it works: you hold all of your assets inside of the Series LLC. Then you have the Series LLC owned by the living trust as part of your estate plan. The living trust is what then says who gets what when you die. When the Series LLC is owned by the living trust, now everything automatically is controlled by the living trust. So let's see what this looks like. So bear in mind that every good estate plan has the two parts that we just talked about. It has the living trust and the pour over will. The living trust dictates who gets what, and the pour over will is just a really simple one-page will that says anything anything I didn't put into the living trust, pour it into the living trust and just distribute it as it's stated, right? The living trust makes it so your assets avoid the proceeding after you die. That's called probate. In probate, assets, especially real estate, become really vulnerable because nobody actually has control of the assets for a period of time until a court, in their own time, makes a decision about who's going to be able to control the assets, right? This can be really problematic if the probate proceeding is actually contested by anyone saying, well, who gets to control the assets? It's actually going to have a legal dispute. So potentially for a long period of time, nobody can control the assets. The living trust allows your assets to bypass probate and pass immediately to the heirs, so they can start taking care of the properties right away. That's collecting the rents, paying the insurance, making sure the mortgages are getting paid, taking care of it. Make sure those assets don't get spoiled, so that way they're actually going to what you want them to go to. So we use the living trust to own the Series LLCs so your estate plan never goes obsolete. That's what will flow in and out of your Series LLC structure throughout your life as you buy and sell them. And meanwhile, your living trust holds the ownership of the company. So it never needs to be updated or changed, because what's going to be changing on the day-to-day basis or year-to-year basis is all going to happen inside of the Series LLC. And this next slide, guys, this is the Royal Protection System all laid out here for you. So is everybody with me so far? This is the final step. So here's where people's eyes really light up. Step 5 is locking down your complete protection. It's what you need to do is you use a shell operating company to transact all of your business, folks. If you really want to up your game and have the ultimate protection where you don't even have to care about lawsuits anymore because you know you're bulletproof, then you need to set up a shell corporation. And let me be clear, there's absolutely nothing shady about shell corporations. Corporations, these big guys you hear about all the time, use them all the time to control their liability, and now you can use them too. At Royal Legal Solutions, we offer to all of our clients the use of a shell corporation as an operating company, which is your face to the world. It's any of your active business. Anytime you're sending emails to the outside world, it's part of your business. Hiring contractors, sending emails to negotiate contracts, all that is part of the operations of your operating company. So if it's your landlord for all of your properties, it sends all the emails, it signs contracts, it does the business dealings, and if anything goes wrong, it's your fall guy. So you and your asset holding company don't take the brunt in any of those lawsuits. So if you have a shell operating company in place, your worst case scenario is typically just winding down that operating company and starting up a new one. What does that cost you? Maybe $800. In terms of the overall protection, the Series LLC with the anonymity in place will protect your assets. The operating company will protect you personally from anything that happens. So now something I just want to make absolutely crystal clear. Everything I laid out for you, all 5 steps of the Royal Protection System, this is proprietary information for asset protection and estate planning. The Royal Protection System is the synergistic system for protecting yourself and your loved ones from the kinds of lawsuits and judgments that often come out of nowhere to derail everything real estate investors work so hard to build. So simple misunderstandings that can turn ugly, costly court battles. You're not going to find this type of protection anywhere else because nobody else really specializes in the most the most advanced asset protection that you specifically need for real estate investors. The whole reason I created this system is because I'm a real estate investor myself, and I was incredibly frustrated by the fact that there was no comprehensive system available for us to rely on as investors. We needed something that would overcome all of the asset protection estate planning needs as investors without costing a fortune. And the reason I'm so proud of the Royal Protection System is because it's been tested and proven to make real estate investors nearly invincible when it comes to defeating lawsuits. Remember the series LLC and trust, all of your assets remain protected and hidden. If you're threatened with a lawsuit, hopefully your insurance company will pick up the tab, right? We all hope that. But if they don't, the lawyers will likely never sue you because, at least on paper, it looks like you're not worth the trouble. As far as they know, you're someone who couldn't buy a toaster. Even if they did sue, they'd get almost nothing. At most, a single asset. And finally, by incorporating the living trust and the power of a will in your estate plan, you know that your assets are fully protected during your lifetime. And not to mention the peace of mind that comes in knowing that your assets will stay protected. It's not to be understated about the power that you can have as an investor to use these legal tools for your maximum leverage. It's just for real estate investors. No one else has this type of information for you guys. And I don't know any other asset protection attorney that has the infrastructure in place with a support system like we do, even if they ran out tomorrow to try to build one. So think about it for a minute. What if you never had to worry about a lawsuit? What if the next time some deranged tenant called you up screeching about damages, you could just hang up on them? What if that next email you fired off in haste because you were scrambling to do 3 things at once didn't keep you up at night? How much value can you attach to that peace of mind? I mean, would you sleep better at night? Would you think more clearly and more productively when you're working? Would it free you up to do more deals and grow your wealth? How would it affect you personally? How would you lose your temper less often? Would it lower your blood pressure even, not having the stress of having threats come at you potentially? Would it help you take more pleasure out of your life? I know that these are all things that I can answer affirmatively for myself, and know that it gives me all of these benefits to know that my personal investments that I have in over 10 different states in every asset class are safe. And we use that using this structure, and which is the same structure that I recommend for all of my over 2,000 clients across the country. And if you can't say the same for yourself, I would encourage you to look into this to be able to make sure that you're going to be able to get yourself that same peace of mind that I enjoy and that my clients enjoy. So investors that work with me, I can tell you that simply they just don't lose money because they very rarely end up in court. They have a battle-tested system that works, and they have me fighting on their behalf on those rare occasions when it's necessary. Remember, guys, I was one of those elite-level litigation attorneys before I started working exclusively in asset protection for real estate investors. The beauty of the Royal Protection System is we make it so difficult for people to sue you that it just doesn't happen. And from now on, plaintiffs' attorneys will view the prospect of suing you as a total pain in the ass, and that's exactly what you want as a real estate investor. And by the way, guys, I've worked with thousands of clients in recent years, and of the few who ended up in court, how many do you think lost? What would you consider to be a reasonable win-loss ratio? How about 0? Nada. I've had 0 clients lose in court that have been clients of mine with the system in place. And that's right. It's not a single client. And that's how powerful the Royal Protection System is. So let me just take a quick put this all in value perspective for you. This way that you can see a truly phenomenal opportunity you have right in front of you now. And so ordinarily my fee structure is broken down, as you guys can see over here on the right. It's a standard pricing. Operating companies for $19.50, asset holding companies for $39.50, anonymous trust at $500 a piece, property transfers at $300 a piece, estate planning at $2,500. And what you can see, guys, on here is the family office. What that is a comprehensive service we offer to do all of the maintenance for all of your companies, unlimited updates to the companies and your estate plan, so things are never out of date. If anything changes at any time, you just let us know and we update it. We take care of all the annual maintenance for you, so that way you're just able to make investments and manage the bookkeeping. We take care of everything else for you. And when you have questions at any time, you have unlimited contact with our office. That comes down to $49 a month. We're going to give you 6 months of it for free. That $49 a month gives you unlimited access to professionals to be able to get your questions answered about your real estate, about your company, about your estate plan, all the information that you might be guessing about or posting up online or spending hours researching. You just pick up the phone and get the answers you need directly from a professional. And you guys can see here, we're giving incredible discounts to you guys here. We're discounting it from a total package price of $9,794 to only $5,900. That's a $3,894 saving that we're offering just to you guys, right? So here's my special incentive, guys. It's believe me, and you don't want to miss on this. And I've added this bonus, a special bonus for attending this webinar, and I'm extending a special discount for only the first 60 people to reach out to me today to schedule a call. You don't have to decide on what level of protection you want right now, right? All of these things that they can scale up and down. But you just need to be one of the first 60 people in order to lock in the special discounts. Just hit the link I'm about to share to get started, and during your scheduled call, you'll speak to a member of my team, so we can get an understanding of your specific situation, answer any questions you have, and get the ball rolling and being able to get you a customized plan for what you need growing with your assets over time. So, there's one other thing I wanted to mention before sharing this link. I can only accommodate the first 60 new clients at this price point, and I'm not making this up, guys. We are limited in the number of staff that we actually have to produce all the documents and to be able to render the high levels of consultations that we have here. So we really are limited here. We have it down to a science. We're very efficient, but I can't ask my staff to take on more than 60 new clients right now. So if we push it beyond 60, I know it won't be fair to the rest of my team. So what I'd like to do is just offer this to the first 60 people. So please, if this is something you want to pursue, you need a schedule right now to claim an open spot and qualify for all the discount and bonuses. And let me go ahead and share the link with you guys so you guys can go ahead and start with that. So remember, we're only going to take the first 60 people, and this is the link that we have here. So I'm also going to throw in another special bonus for you guys just to make it a total no-brainer for you. And so right now, if you go to the Royal Protection, to get more information on the Royal Protection System, go into this link. And for the next 30 minutes, if you go into this link, I'm going to give you free access to our family office for 6 months. That's a $294 value, and we'll be taking hours of work off your hands. So that family office, like I mentioned before, it includes up to 3 strategy calls lasting 30 minutes every month. You get a biannual holding review, a biannual estate review, a nominee trustee service. We give you the corporate compliance totally taken care of from you. That's the registered agent, the business address, the franchise tax filings, everything that you need done inside of that family office package. Guys, we typically limit this to 3 strategy calls lasting about 30 minutes each month, guys. We're very flexible on that. If you have more things that are going on, we are here to help you as much as that you really need. We just put in a cap there so that way, so we can all be fair, right, about what exactly people are using. But if you need help, we're here to help you. At the Royal Legal Solutions, we also provide you 100% refund guarantee right up until the final delivery of your products, right, and all of your papers. So I don't think you've ever heard it from any other attorney offering some type of guarantee like this. And the reason why is because no other attorneys stand behind their work like we do. We're committing to that everything we have to tell you in this presentation, all the way up through the production of all of your documentation, the education that go along with that, has to meet your expectations 100%, or we just give you all of your money back. So it's really absolutely zero risk. I want you guys to know 100% that I'm committed to giving you everything that I'm promising you. So there's absolutely no risk for making this call. The only risk is what could happen if you don't take the next steps that are necessary to protect your wealth and to protect your legacy. Protecting your assets is necessary to safeguarding your future. And I'd hate to see you lose out on one of these outstanding bonuses and discounts. So just click the link on your screen right now and schedule your call. Like I said, we can only accept so many new clients at a time. So please do yourself a favor and take advantage of the exclusive offer. The free 6 months of family office bonus expires in about 27 minutes, guys. So you need to get in there in the next 27 minutes and get access to all of the freebies that are associated with that. The 2 free proper transfer bonus goes away tonight at midnight Central Time. If you can extend all these offers, I can extend all these offers to Sunday at midnight Central Time if you schedule your call before this full webinar ends. At this point, I have no idea when I may ever have this offer again, if ever. To do something like this takes a lot of staff and planning and behind the scenes coordination. It gets really expensive for me, especially when I have to staff up to meet demand. So like I said earlier, we have Royal Legal Solution. We take real pride on delivering the absolute best possible client experience. It's a huge commitment on my part. So go ahead, click the link, schedule your call now to lock in these fantastic savings and bonuses. And there's no risk whatsoever to you because of the 100% satisfaction guarantee. So now I just want to say thank you guys for being with me here today. And I'd like to turn everything over to Greg DeSalvo.
So today at 1031 placement, and again, I typically work with 1031 intermediaries. In my career, basically it was focused in and around helping bank clients with 1031 exchanges as well as placing their 1031 incomes. And what I learned through a 25-year career is that many clients were all seeking the same risk-adverse types of investments. So safety and security versus speculation, and appreciation and risk of loss and value. All the while they were carrying the expenses and management of a property. And as we learned in 2006 and 2012, values do not always go up, and clients no longer wanted to participate in market corrections. And so what did that mean? What it meant is clients were looking for predictable, longer-term sustainable income with little to no risk. So what that meant for them is they were looking for a steady monthly income with built-in rent increases, what I consider an inflation rider, for long periods of time, directly posited to their account, no different than any pension or Social Security deposit, and properties that were professionally managed. No more phone calls of needy tenants bothering you. Oh gosh, I've heard everything from the light bulb in the refrigerator is out to damages by tenants and pets. All of that was seemingly wanting to be removed. And so what we did when we spun off 1031 Placement Advisor is we sought an opportunities for these clients, and we sought investment classes that really preserved their equity in their properties. Those investment classes comprised of triple net lease properties and DSTs and TICs. And today we're going to focus on TICs, which is the tenant in common. And it's a very small group of like-minded individuals that share the same investment vision. And I typically have between 8 and 12 that purchase ownership and receive a deed in a brand new commercial building that is debt-free with a brand new lease, often 20 years or more. And these types of properties are typically the triple net lease environment, which means you no longer have the maintenance on the property, you no longer have the taxes on the property, and you no longer have the insurance. That risk is now shifted to the corporate tenant. You literally just receive your payment check every month, and you become what we call the lazy boy landlord.
But guys, if you have any questions here about the 1031 pieces, then go ahead and drop those here inside of the chat box, so that way we can answer those questions for you. Greg, I was wondering too, have you worked a lot with any of the 1031 types of issues that happen with like Delaware statutory trusts, or is that something that you present on often?
I have. So obviously, what I refer to as the Delaware or the DST, the Delaware Statutory Trust, it was Wall Street's answer to the tenant in common. And so we see clients that invest in the DSTs, and they really do perform very much like a mutual fund. Unlike a traditional 1031 exchange, you are receiving stock instead of deed. And with the tenant in common, you do actually receive the deed that's recorded in public record. A primary difference between the DST and the TIC is that primarily there is going to be a lot of debt. At least 50 to 60% on a DST property will have debt. And so in today's environment, my clients are shying away from the DSTs, mainly because we're in an increase in rate environment. And what happens in that 10-year or 5-year balloon when we have a rate increase? So with the tenant in common, they are debt-free properties, meaning you cannot place debt, nor can any of your peers. And so that becomes a far more suitable offering. Now, the DST can absorb some of your debt if you're doing an exchange and you're having to exchange some of that debt, but be very mindful of the surrender charges, the management fees, and consequently that affects the bottom line of anybody's return.
Greg, is there also things that you see where people, get into trying to do a 1031 and then it kind of falls through the cracks on them and they're kind of scrambling to be able to figure out what to do with assets in that scenario? And I'm sure that's come up with you. I get clients that ask me questions about that all the time. What are the common strategies that you look for people to say it's like of what they would do when they have a 1031 strategy that, kind of falls through the cracks on them?
Absolutely. Great question. A very common employed strategy that I use with several intermediaries, and a lot of intermediaries will encourage this behavior. You're allowed to make multiple elections. And so a tenant in common is a very appropriate, even if you do desire to have another piece of real estate that you want to manage on your own, listing the tenant in common as a backup is a very favorable plan. Furthermore, I would say 95% of my business is that of clients rounding out an exchange. So a client is selling a property for $800,000, they're buying an additional property for $500,000. I would then come in and take the 300 all the way down to the rounded out penny, and we would round out and complete an exchange. Be it that you would have now two purchases, your overall ROI would increase, and you would not have a taxable event by employing that strategy.
Awesome. Yeah, those are good insights into it. I think that's where it makes a lot of sense for people to use, really experienced professionals when it comes into these strategies, because if everything goes smoothly, right, you can use any out of the box type of strategy, right? What really pays when you're working with professionals that can help you when things get rocky. At least that's been my experience. Has that been your experience, Greg?
It has. Right now, a lot of my seasoned investors are taking advantage of what they consider a very high market. And so they're excited to be selling in a top of the end market, and then quickly realize that they are also trying to buy in that same market. And so a lot of my clients will use the tenant in common for maybe a 4 to 8 year park, if you will. And oftentimes I'm at a 7 cap net as a return. So they will utilize it as a structure to hold the funds, not have a taxable event. And then furthermore, in the years to come, if they desired, they would then exchange out of the tenant in common and go back and possibly grab opportunities that were more palatable or within their strategy for returning a higher yield. I caution clients on a daily basis that chasing the market, and we all are guilty of this, we have the euphoria of selling for a big win. And then we want to duplicate that again. And there are two markets. One is obviously a buyer's market and the other is a seller's market. And very rarely they blur at the same time, where you can buy and sell in the same market and achieve the exact same results. And so the tenant in common oftentimes becomes a very high yielding park place, for lack of better terms. And then for many other folks, it becomes such a permanent income stream that they no longer want to step away and actively manage a property. And furthermore, the taxes, the insurance, the management cost, all of that is taken back to the owner if you were to move away from the tenant in common. And oftentimes the returns just don't match.
Awesome, Greg. I see on the slide here that it talks about triple net properties. Is that something you were going into back in the slideshow?
Sure. Well, obviously, these properties that I'm speaking about in the tenant in common are triple net lease properties. And for folks that don't understand exactly what the triple net property is, and it's non-traditional from the consumer space, we are now shifting the taxes, the insurance, as well as any and all maintenance of these said properties to the corporate tenant. These are often Fortune 100 or 500 companies. They have very large maintenance crews, and it's very unemotional to them. And so absorbing those costs is actually a very normal process in that space. Obviously, I'm a broker as well, so some of my clients desire to buy triple net properties, of which the Walmarts and the CVS stores, you can buy those outside of a tenant in common if you so desire. And then obviously the ground lease environment, it works exactly the same way as a triple net, but at this point in time, you're not responsible or ever responsible for the building on the property. So you lease simply the ground, and the tenant pays for any and all construction cost and or removal of the property if they no longer utilize it after the ground lease summises. Yeah, and we covered the Delaware Statutory Trust, which is basically buying stock into a mutual fund that owns real estate. And then the tenant in common, which is probably the most in vogue of all of them at the moment, mainly because there's no debt on the properties and the higher cap yield returns.
Hey, Greg, we got a question from Carol here that says, how sellable are these TIC?
They're very sellable. The way a tenant in common will work is you will have to make your peers, and I typically have 8 or 12 clients in any one grouping, and these are all like-minded investors. You'll have to offer to your peers first, as they would you, and that's the first 15 days. At the end of the 15 days, I would say 99% of the time, one of your peers absorbs your interest. If they do not, then the tenant has second bite at the apple to go ahead and absorb your ownership. So while selling your ownership in any of these properties is quite easily, one of the things that oftentimes is overlooked is the 1031 exchange if you're participating in one. The IRS will have its own separate guidelines for when it is suitable to sell. The IRS maintains that your holds must be long-term, and therefore, if you are a flip environment kind of individual, the 1031 exchange is not the strategy for you to employ, mainly because your exchange would be disqualified by the IRS if you do not hold it for a period of time. I've heard from the big accounting firms where they encourage clients 3 tax returns. That doesn't necessarily mean 3 years. It means 3 tax returns, and I've heard a mixed message on that, but it's at least 2 to 3 years to observe what the IRS says is your intent of a long-term hold. Now, as far as selling, I could buy it for you today, and we could turn around and put it right back on the market tomorrow, and we could sell your property no differently than any other real estate holding you would have, typically within the 60 to 90 day period after we have observed the selling responsibilities. So, I hope that answers Carol's question.
Yeah, I think that's actually great. Let's go ahead and move the slide presentation over to Dave. All right, Dave Foster, everybody, 1031 exchanges.
Good afternoon. My name is Dave Foster. I'm with a company called the Exchange Resource Group. And we're going to be speaking today about a topic that I deal with every day, and yet still is a relatively unheard of but incredibly powerful practice and tool for your real estate investing. It's called the 1031 Tax Deferred Exchange in reference to Section 1031 of the IRS Code. And if that hasn't already put you to sleep, then hang on, you may make it through this free sample class that we're teaching. When you join the Green Club, you'll have the opportunity to access not only this, but also several full multi-hour teachings on the uses of the 1031 exchange, the power of it, how it can make you a better real estate investor over the length of your lifetime. Internal Revenue Service Code 1031 says that a 1031 exchange is blah, 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 blah. You don't have to pay tax on the sale of your investment real estate. It's basically a process, but at the end of the day, rather than you pay the tax on the sale of your real estate. You get to use that tax in a deferred manner indefinitely to advance your own investing. And if that sounds intriguing to you, the thought of using the government's money, or OPM, other people's money, in this case, government taxes, then stay with us. With the 1031 exchange, instead of paying that tax, you're going to defer that, and you're going to use it yourself. Now, what is so powerful about that? Certainly, if I made a bunch of money on the sale of a piece of real estate, then I would love to not have to pay tax if I could. But here's the multi-year and multi-generational power of this. I want to take you through a brief exercise so that you can start to see how startlingly powerful this is. We're going to start with two investors who are going to do everything exactly the same, except for one thing. And that is that one of them, investor B, is going to pay the tax on every real estate sale as he moves forward. Investor A is going to use 1031 exchanges, and he's going to defer the tax. And as the statute mentioned, that means that investor A is going to be able to take the deferred tax and use it to build their own portfolio. So if each one of them had a property that they were selling with $100,000 in gain, investor B is going to pay, let's say, 20% at a capital gains rate of federal and state, and they're going to end up paying $20,000 in taxes. Now, that means they still made $80,000 in cash profit. That's a nice thing to have. They're going to be able to purchase with that money another $400,000 worth of real estate. But take a look at investor A, who's going to access a 1031 exchange to make this sale. So when they do not pay tax on the $100,000 in profit. So their tax paid is zero. So after the sale, then they have $100,000, which, used as a 20% down payment, allows them to buy a $500,000 piece of property. So hopefully that will set the stage for you. And now let's take this further into the next time when they're both ready to sell. Once again, investor B is going to pay the taxes as they go, so they don't owe any taxes. Investor A is once again going to defer that tax and do another 1031 exchange. So this time we start to see a separation in the leverageability of the money that they have left. Investor B, owing no taxes, is able to purchase a property around $440,000. Investor A is able, using the tax-deferred taxes as well as the net proceeds of their sale, to purchase a property worth almost $700,000. I think you're starting to see the picture. Year 10, investor A is now able to control almost $1 million in real estate, although they owe a bunch of taxes that are deferred for them by virtue of the 1031 exchange. Investor B, on the other hand, owes no taxes. They're able to purchase a property worth almost $500,000. But the shocking difference in return that you can make after a $400,000 purchase or $1 million purchase, you can certainly imagine in terms of net operating income. If you extend this example all the way out to, say, year 20, which is, the end of a good, normal investing career, after 20 years of working it hard, you want to slow down a little bit. It's time to start thinking about how that money's going to work for you. But what money is it that you have to work with? Investor B doesn't owe any taxes. Investor B has $800,000 in real estate. If they're making a 10% return on their investment, they're making about $80,000 a year in net cash that they can use to enhance their retirement or to continue investing if they want. But certainly that's pretty nice war chest to have for whatever you want your next stage of life to be. And if you look at the far right column, you'll see that they've paid $106,000 in tax along the way. That's quite a bit of tax, actually, isn't it? Now, investor A, on the other hand, has not paid a penny of that tax. They still owe it. But look at what investor A is able to control and to generate income off of, simply because they took the opportunity at each point to sell and do a 1031 exchange. Investor A is now in control of $3.6 million of real estate. If they're able to generate a 10% return on that, they're making $360,000 a year. Now, I don't know about you, but I would much rather try to retire on $360,000 a year than I would on $80,000 a year. That's the power of the 1031 exchange. Now, people typically will come to me at that point and say, but you still have to pay the tax sometime, don't you? Well, remember, that tax is going to be deferred indefinitely. And if you go to my class, which you'll find on the courses available drop-down menu under 1031 exchanges, you'll actually find several strategies to not only defer that through your life, but actually eliminate it at several points in time. Another great reason to join Green and take a look at the education that we've got to provide for you. So back to investor A. But Dave, isn't investor A going to have to pay those taxes someday? Okay, maybe. But even if they do, at $360,000 a year of net income, it's going to take them, what, about 4 months to pay off all the taxes that were pent up over the year. And at the end of that 4 months, they're still going to be making $360,000 a year. And investor B, who paid the taxes they went along, is still only making $80,000 a year. Now, that's what the 1031 exchange can do for you. There's some very strict, rigid, basic requirements for the 1031 exchange, but in essence, you need to know this going into it, and that is that the process for completing a 1031 exchange is absolutely no different than what you normally do. You buy a piece of real estate, you hold it for investment. When you're ready to sell, the 1031 exchange is reflecting on your closing settlement statement. The proceeds go into escrow with your qualified intermediary. More about them in a second. And then you go find the new property you want to buy and you purchase it. Now, that's exactly what you're going to be doing anyways, isn't it? You buy investment property, you hold it, you sell investment property, and you buy new investment property. So the process itself is absolutely no different. It's no more difficult. But in the middle of it, there are some requirements that you have to meet. Section 1031 exchanges are only available for investment real estate. From the day that you close your sale, you've got 45 days to identify your potential replacements. You have 180 days to complete the entire process. You have to use the services of what is called a qualified intermediary. The taxpayer who sells the old property has to be the same as the taxpayer that purchases the new property. And there's some reinvestment requirements. You have to purchase at least as much as you sell in order to defer all tax. And you have to use all of the proceeds from the 1031 sale in the next purchase. So within those 6 requirements, you can imagine there's a lot of nuance, and it's very easy to run afoul of them. And again, we discussed these at a much greater depth inside the class on 1031 exchanges. But I wanted to give you just a broad brushstroke on the 1031 process today. Properties held for investment, 2 timing requirements, and most importantly, you have to use the services of a qualified intermediary. A 1031 exchange is not a DIY project. It's required by law. And that intermediary has to be in place prior to your sale. So if you're just now watching this, starting to think about maybe selling that property next week or next month or next year, this is the perfect time for you to begin your 1031 education. There's many ways that 1031 exchanges can be used. You can take several investment properties that you have and consolidate them into one larger investment property. You can take larger properties or single properties and do 1031 exchanges to buy many properties that are located in all sorts of regions and of types and sizes. Yeah, and because it only requires that it be investment property, you can sell residential and buy commercial. You can sell industrial and buy raw land as long as it's used for investment. It all qualifies for a 1031 exchange. And of course, in the example of investor A and investor B that we looked at earlier, how easy is it to position your portfolio such that you're generating a lot of revenue every year from deferred tax dollars that you get to use for your own self throughout your retirement?
Thank you so much for joining me. I know, and I know David Foster personally. He's been a colleague of mine for years now. He's really great at the 1031 exchanges and helping investors walk through it. Highly encourage you to reach out to him at the phone number that you have here, the 850-889-1031, or the Dave at the1031investor.com. He's going to really be able to help you guys out on what are the strategies that are going to make the most sense for you for the 1031 exchanges along there with Greg, guys. So feel free to reach out to him with any questions that you have about 1031 exchanges from today's webinar. Myself, if you have any questions about the asset protection or what you can be doing, or what is your long-term asset protection, estate planning, and tax savings with self-directed IRAs or solo 401ks look like, happy to help you guys. Have a great day. I look forward to hearing from you all. And until then, be well.